Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is September 10th, 2025, and we're diving into InnovAge's recently released earnings report for the fourth quarter and full fiscal year 2025. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. InnovAge, a leader in providing healthcare programs for seniors, has just released their financial results, and there's a lot to unpack, especially with their focus on the Program of All-Inclusive Care for the Elderly, or PACE.
Revenue and profitability overview. Let's start with the top line. InnovAge reported a total revenue of $853.7 million for fiscal year 2025, marking an 11.8% increase compared to last year. John, what does this tell us about the company's performance?
This revenue growth is quite significant, indicating that InnovAge is expanding its reach and effectively managing its operations. However, despite the revenue increase, the company reported a net loss of $35.3 million, which is a 52% increase from the previous year. This suggests that while they are growing, they are also facing challenges in managing costs or other financial pressures.
Indeed, and their adjusted EBITDA also saw a substantial increase to $30.5 million, up from $16.5 million last year. What does this imply?
The rise in adjusted EBITDA, which is a non-GAAP measure, indicates improved operational efficiency and cost management at the center level. It shows that InnovAge is making strides in enhancing its profitability, even though the net loss has widened.
EPS forecast and analyst expectations. Moving on to earnings per share, analysts had forecasted an EPS of -2. InnovAge reported an actual EPS of 1 yuan. How should investors interpret this?
Beating the forecast, even by a small margin, is a positive sign. It suggests that InnovAge is performing slightly better than expected, which could instill some confidence among investors. The fact that they managed to report a smaller loss per share than anticipated is encouraging, especially in a challenging financial environment.
And with only one analyst covering the stock, how does this affect the perception of the company's financial health?
With limited analyst coverage, the market might not have a comprehensive view of InnovAge's potential. However, beating the forecast can still positively influence investor sentiment and potentially attract more analyst attention in the future.
Operational efficiencies and future outlook. John, let's talk about operational efficiencies. InnovAge reported a center-level contribution margin of $153.6 million, up 16.3% from last year. What does this indicate?
This increase in contribution margin reflects InnovAge's ability to manage its costs effectively at the center level, which is crucial for their business model. It shows that they are optimizing their resources and improving their service delivery, which is vital for sustaining growth.
Looking ahead, InnovAge has issued a revenue guidance of $900 million to $950 million for fiscal year 2026, along with an adjusted EBITDA guidance of $56 million to $65 million. How does this outlook shape your view of the company?
The guidance suggests that InnovAge is optimistic about its growth trajectory. The expected increase in both revenue and adjusted EBITDA indicates that they anticipate continued expansion and operational improvements. This forward-looking guidance is a positive signal to investors about the company's future prospects.
CEO's perspective and strategic initiatives. CEO Patrick Blair mentioned that fiscal 2025 was a strong year due to responsible growth and financial discipline. How does this align with InnovAge's strategic initiatives?
Patrick Blair's comments highlight the company's focus on sustainable growth through disciplined financial management and compliance. InnovAge is clearly prioritizing clinical performance and regulatory adherence, which are critical in the healthcare sector. This strategy not only supports their current operations, but also sets a solid foundation for future growth.
And with the momentum expected to continue into fiscal 2026, what should investors keep an eye on?
Investors should watch for how InnovAge executes its growth strategy, particularly in expanding its participant base and enhancing its service offerings. The company's ability to maintain its operational efficiencies while scaling up will be key to its success in the coming year.
Key takeaways. In summary, InnovAge has shown strong revenue growth and operational improvements despite widening net losses. Their ability to beat EPS expectations and provide robust guidance for fiscal 2026 is promising. John, any final thoughts on InnovAge as an investment?
InnovAge is demonstrating resilience and strategic focus in a challenging market. While there are risks, particularly with their net losses, the company's growth potential and operational efficiencies make it an interesting prospect for investors looking at the healthcare sector.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on InnovAge's performance in the comments below. Until next time.